Hello, everyone. How we doing tonight? Quick shout out, Alex. Thank you for reminding me. I'm not gonna lie, I had completely forgotten what time it was. So you give me a little push in the ass to get in here. 5 minutes late, a little late, but I do appreciate it.
Yep.
Thank you, NJ. What the fuck is going on? You're never late? Yeah, no, I honestly didn't look at the time. And I was actually, if you guys have the indicator, you'll notice with Real Trader Tim's all-in-one indicator, I was just pushing an update and I just lost track of what time it was. So, thank you for reminding me, because if not, it would have been probably another 10 minute or so before we got in here. So, thank you for that. And yeah, I know these changes in review times are sometimes last minute, but I'm trying to adjust my schedule to it. So I've always said it whenever we have a lot of PA reviews, which means 4 PA reviews during the week, I'm going to do one that is going to be earlier. That earlier time is always 5 p.m. EST. And for my European friends, that's a little bit better, just after market close. And later today, I'm actually going to be giving a ride to my parents. They are leaving, going on vacation. So I just adjust it to my schedule, which day is best, and today was best. Now, talking about price specifically, today was sexy. All right, we'll talk about how to navigate it, which wasn't the easiest for sure. But what do we anticipate on a Monday NFP? What did we talk about in yesterday's outlook? We expect an aggressive trending day. Now, was it clear if we were going to go to the lows or to the highs first? No, but we had our previous weekly high, we had our previous weekly low, and I even talked about how we anticipated very early on to be respected, and how we could also dive into this order block. And if we bring our quarters here, I didn't look at this today. No, we did not reach the quarter. Anyways, with order blocks, I always have it very simple. I look at the mean threshold and the specific level whenever it's I'm forgetting the word for it, but next to a fair value gap, I use the full candle. If it's not next to a fair value gap, I'll only use the body of the candle specifically. So in this case, did not reach mean threshold, respect of that order block, respect of that fair value gap, after quite a large gap up, right? Can we talk about this? And what did I say whenever we have a large gap, right? And this is a large gap for me, right? This is almost 0.5%. We have almost 100 handles. This is a large new week opening gap. It is that simple. I don't need to overcomplicate it. And let me actually see if I can plot this on the chart. There we go. So we have our new week opening gap high and low and the quarters. And this is what I utilize whenever there is a large gap. And I look for frameworks that are going to be targeting this gap specifically. I know that Monday will trade within this gap quite a bit. I also know that my target in this case was previous week low. So now let's look at what kind of frameworks this could have provided. You know what? I'm actually just going to draw up the daily fair value gap and leave that on our chart. Let's just use the gray, standard gray, just so we can go see it even when we go down the 50-minute chart. And of course, now there are a bunch of drawings. Let me actually remove the opening prices so we can focus simply on the sessions. Looking at this, right? You have your new week opening gap. Clearly, we traded within it, and I can frame this as my daily accumulation, right? Because we keep returning to that new week opening gap and trading within this higher time frame fair value gap, which is our daily fair value gap. So for me to establish a bias during a day like this, I anticipate that this gap will be respected, right? This is what we talked about. Okay, but how do I frame high probability trades off of this specific gap? Well, it's actually simpler than it looks. I frame it based on the daily expansion. And for me, when I say this, I mean power of 3. So in this case, what do I see? I see that we've accumulated price. Price has been consolidated. And then we have a manipulation higher. And more importantly, SMT confirms that. Right? We always talk about this, but SMT is not the reason why I think there is a manipulation in this move to the upside. SMT confirms that my idea, and sorry for that notification, let me just mute my phone. And that idea is why I can add more confluence to the idea and I keep repeating idea, sorry about that, that this is my daily accumulation, manipulation, and then I can look for distribution lower with high probability frameworks below. London low being reached early on in the New York session. We have a pure London raid framework where London high has been taken out overnight. What does overnight mean in this case, right? Overnight means that it's between 5 and 9:30. So between the end of the London kill zone, which for me is 5 a.m., and the start of the New York session. London high has been taken, 77% chance we go there. And on a Monday, it's actually even bigger. So Monday NFP even bigger. You guys want the exact statistics and to know when that level should be hit, go and write statistics. But for now, I'm giving you that, just telling you that we have that. Same thing for Asia here. And we also took out current high of day at this level. Just multiple additional confluence that this area has a high probability of forming the high of day. And when specifically at 9:30, we had that Judas swing that formed the SMT, I didn't need anything more. So even though there was actually 10 a.m. news today, we have everything we need to anticipate that that 10 a.m. news will lead to expansion in that manipulation, which means that I can trade before. Right? I've talked about this before. The only time I will trade before news, which means before 9:30, never before 9:30, but after 9:30 and before that news, which today was at 10 a.m., is when I have a clear Judas swing at my session opening, so at 9:30, and again, it has to be confirmed with SMT. So all these three things, so I guess two things, time-based manipulation confirmed by SMT has to be present at that open, and then I can start looking for trades. So for me personally, and I mean, I see Sam in here, we were just talking actually about the short. I shorted before, and I was done before the news, and I didn't trade the rest of the day. And the truth is, I didn't get a piece of everything that happened after, which is a very large, almost 650 handle move lower, right? A 3% move lower, right up to our objective, which I said we shouldn't hit in a single day. Well, we did, right? We very clearly did. So we're going to talk about this move, even though I did want to be transparent and say that I didn't catch any piece of this. I only caught the first leg. And that's not a mistake. That's just me being safe. And in conditions where the markets are so aggressive, I like to get my base hits. I like to be safe and manage my money accordingly, right? I'm seeing someone that actually said he can't make it to the review tonight, but that had a question if it was a valid setup. We're going to talk about the early shorts, actually. That's where we're going in. One thing I also want to point out is how I use specifically this new week opening gap. And as you can see, I have my quarters on. Now, why do I have these quarters on my chart, right? Because I use them and I split them into smaller ones. I've talked about this previously for fair value gaps, but this is how I interact with new week opening gaps in the same way. I want to see the respect of one of these levels, and I interact every area between levels as a PD array of its own, where I want to see the bodies of my candle respect an area. And if we push through one area and close above a said level, then I want to see the bodies respect this area. And once we break out in one direction, I'm going to expect the other level to be met, and then once again to respect the other area. So when I see a retracement into here that did not respect the 0.5 of my level, I'm looking for a continuation to 0.25 in this case, right? 25%. Once we respect that 25%, I'm expecting that we will respect this final area and not trade back above the new week opening gap high. Now, of course, if you look right here, you'll say, oh, well, look at this bullshit, right? We closed above here, and then, well, actually it worked. Well, no, you closed back below here, didn't reach the bottom, and then closed back above, and now it worked. Okay, so how do you know? Well, for me, it's all time filtered. So I only look for this during my specific sessions, and for me, that's New York. And New York, 9:30 to 11:30 that I look for trades, we had beautiful delivery using that new week opening gap. So I'm going to go down to 1 minute, and we're going to look at specific setups, but I did want you guys to know what these levels are as we're going to be going over them. And those are the purple lines in case you're wondering. As I was saying, right at 9:30 here, and let's bring back our opening prices now. right at that 9:30 mark. This is a line showcasing the 10 a.m. news, in case you're wondering. Right at that 9:30 open, we first went a little bit lower, and with SMT as well. That's important to mention, right? Because what do we know about SMT on both sides of the ranges specifically? For those quarters, you're talking about the body and not the wicks, right? Always. Always. When I talk about respecting or disrespecting a level, I'm always talking about candle bodies. Even when I'm talking order block mean thresholds, fair value gaps, anytime I'm talking about a specific level, always the candle bodies. But just to get back on this, right, when there's SMTs on both sides of the range, what does that tell us? Well, price is consolidating. We know that, and we don't want to engage in consolidation. So then you might ask, okay, well, Ollie, why are you trading before the news then and trading before that? Because I don't care if we have SMT on both sides. I need a time-based manipulation confirmed by SMT. So I had that for longs, so I could look for longs, and I had that for shorts, and I could look for shorts. But as we said about the daily power of 3, right now, I am framing this move higher as manipulation, followed by distribution lower. So I'm not going to look for longs here because I'm expecting price to go lower. So looking for shorts at this area, this confirms that I can look for shorts. And anyways, when are we no longer in consolidation? When we have a raid. We got that raid. So even though there was SMT on both sides of the range in this area, since we have that raid, I will still anticipate that we are done consolidating and are now ready to run. And especially if you take time into consideration, now the New York session has started. We've had our move higher time-based manipulation confirmed with SMT. We are now ready to move lower. So a lot of steps there, but I do want to explain every single aspect of it so that if you guys ever get confused, well, you can return to these videos and actually get very detailed explanations of why, how, what are the rules for it, why is he allowed to trade before the news in this area but not there. I like to be detailed in that sense. And from that point on, I'm just waiting for a setup to form. What constitutes a rise model setup? Well, for me to have an entry, before even thinking about objectives, right? For me to have an entry, I need a breaker block. Well, we have a swing high to a swing low here. If we plot our standard deviations on this area, within our higher time frame PD array, right? I am going to remove this large fair value gap now, but this was our daily fair value gap here. So very high probability setup to look for shorts in this area. Now, we formed the fair value gap there. If we formed it on this bar, which is what I was expecting and anticipating, that would have been like a textbook entry right above there. Would have been perfect, but no, I did not enter near the high of day here because we hadn't yet formed my bearish breaker block. So I was just waiting for my bearish breaker block to be formed. And as soon as it was formed, right here on this bar, you'll notice that after the next bar closes, this is a fair value gap, because you include the volume imbalance. Now, of course, zoomed out, it looks a little weird, but as you can see, the close of this bar is not the same as the open of this one. So for me, this whole area that we have highlighted right here, let me just change the color to my usual so we can see better, is the fair value gap. So my entry is on the next bar over right here when we trade back into it. Now, this is something that's harder to spot. But anytime I see a volume imbalance, and of course, looking at it with hindsight, it's a little hard. But when you're watching this form live, I see it right away. And I notice, okay, volume imbalance here. So this is the fair value gap that was formed. I draw it out. I see us trade into it. I mark it in my short right here. Now, where is going to be my stop loss? Right at the high of this fair value gap. This is actually your 3 PD array fair value gap. Your 3 PD array stop loss rule. Because if you look to the left here, you'll find one inverse fair value gap right here. And then another inverse fair value gap right here. That would put your stop here. And then your third PD array is your entry PD array in this case. And then you might ask, oh, you're really using inverse fair value gaps from 7 a.m. to count into your stop loss? Yes. And that's why I said it's hard. And when we actually showcased it, I believe it was last week or the week before, I went over how I find my PD arrays. And the step one is I'm going to be looking from left to right, and then going slightly higher, left to right. Oh, I found one. Okay. Does it align? Yes. Okay. That's one. Going again. That's another one. Two. Left to right. And then I have my entry PD array here that is before any further fair value gaps. So no, it is not cherry picked. It is a mechanically set stop loss. Now in this case, what would I be targeting? Well, if I know that this level has over 70%, right? We're talking about like 74 with the specific rules, 73, 74. I am definitely targeting this, 100%. I don't care that my reversal range is here. And if you look at the R, that is a perfect objective. And in this case, it was actually reached before the news. And personally, my trade got fully closed at Asia low here, which is the current low of day. Why? Because I'm up 3.76 R before the news that is in a few minutes. So for me, that rule is just about being safe in this case. And I didn't look for any further trades after. Because I'm up, I was up almost 3R on the day, so why would I look for any further trades at this point in time? I won't, because I don't need to. Now, once again, that's me being conservative, and that's why when I taught my model, when I shared my model publicly on YouTube, I shared the two approaches that there are to it. For me, it's important to be conservative. It's important for me to be pessimistic at all times, whereas I could say, oh, from this point on, it could now reverse. And especially there was SMT at this point, which got invalidated 2 minutes later, right? But at this point in time where NASDAQ reached Asia low, ES did not, even though it was right next to it. So just one extra reason where it could reverse from this point on. So I prefer to be safe, fully close my trade. News is coming. It could be volatile, even though it should be in my direction. And as you can see, it was initially, right? We went lower, but then we retraced. We started a retracement. And as you guys can tell from the result, consolidated for a while. So this was my own trade. And to be honest, was the easiest trade ever to take. And if you were looking to take profit before, well, you're not really going to look to take profit before 1.7R, right? This is what I always talk about. And 1.7R here, you're just going to align to the new week opening gap low, which you anticipate to be reached because we close below that bottom quarter here, which is this dotted line. So in this case, you would have had 2.1 instead of a London low, which is 2.59. Is it the end of the world? No, but in my opinion, the correct take profit partial here would definitely be London low. Now, it's important to note as well, I mean, as I said, Sam also took this short, but the difference here is he didn't see the volume imbalance. And in this case, it would have just given you a better entry with the same stop loss due to the same entries. So I am being pessimistic and showing what it should be actually in this case. So I guess it's not pessimistic because that's what the entry should be. But here, if you waited all that way, if you basically missed this anyways, because you only had a few seconds to catch this, well, you still had another opportunity. And even if I noticed that volume imbalance and missed it, I am definitely giving myself the opportunity to re-enter once we trade back into that gap, because the idea is still valid. And that only provided you with more risk to reward. And in this case, I would have probably looked to partial reversal range. That final quarter would have been nice to partial here, take a little partial here as well, and fully close here just because we're just before the news. And as you can see clearly, a little better entry, a little smaller stop loss leads to bigger reward. But this would be the actual trade, in my opinion, and in my model, pretty much, which is actually not an opinion. But this is the trade that I also took. Now, after that happens, and our news goes lower like that and forms such a big wick, can you say, oh, well, I could start looking for just a short-term reversal, right? With the 10 a.m. candle, if we're going to keep going lower, we have to go higher first, right? With that 4-hour candle that starts at 10 a.m., we want to see an open into a high before expanding to a low. So yeah, you could look for longs at this point. As I said, I fully closed my chart, but I want to help you guys out as well and say, well, okay, if I was looking for longs here, did I have a setup? And what are you going to be looking for? Well, a bullish breaker. Now, the first bullish breaker that I see being formed is this one. Let's actually go into replay mode here. I think that might help us a little bit. So that bullish breaker will be formed once we trade above here, right? So at that time, I'm just waiting. I'm waiting. And then it got formed right here. I actually skipped let's go back. It got formed right here. Now, do you have an entry PD array? Do you guys see a fair value gap or an inversion fair value gap here? No, until here. So you have that inversion fair value gap. Let me just mark it out. But what happened here? We closed above it. Now you're anticipating that it supports, but then we close below it. So that's also invalidated. So you don't have any entry. So even though you have a breaker block, you have no PD arrays to enter on. And a unicorn takes two things. It needs the breaker block, but most importantly, it needs the fair value gap that overlaps, or inversion fair value gap, of course. So at this point, you're just waiting for something bullish to form. And it didn't form until here. Now, is your entry still valid in this area? Yeah, it just had a harder time, needed to retrace into this range. My entry is still good. My trade idea is still good. So now you're just waiting for a retracement into either that fair value gap that's right here or this inversion fair value gap. I just decided to mark out that one, and you had it right here. So let's actually mark out the fair value gap instead, because it is the worst entry. You would have been entered a little bit before. Now you have that fair value gap, inverse fair value gap, and order block for a very nice stop loss here. Where would you look to target? Well, premium and discount. I know that this move higher is a retracement. Why? Because once again, looking at my day, I see accumulation, manipulation higher, which means distribution lower. So during my whole day, all I'm framing is that any move lower is expansion, any move higher is retracement. So if I'm trading a retracement higher, where can I target? Well, the new week opening gap is just great. Targeting the midpoint of this, returning to that midpoint, we have the data for this, very high probability. But let's say we forget about statistics here for a second, and we go even simpler with our mechanical logic of premium and discount of the last 5-minute range, which in this case is this one. I'm going to look at the first premium and efficiency. In this case, there are none near the bottom, and the only one we have already been traded into, so I'm going to go down a time frame. If we look at the first inefficiency in the 1-minute chart, it's actually this liquidity. And it's actually funny because this is your new week opening gap midpoint, and it's just a tiny bit above it. So this is where I would be looking for price to stop. So not a partial, this is my full take profit. And if we get our standard deviations to add additional confluence to this level, we don't really have much, right? Standard deviations tell me that the daily open would actually be a great place to look as a target. But since I'm trading a retracement, I need to be pessimistic. This is my retracement objective. So in this case, I wouldn't really be looking for partial, but base it off of risk to reward. So in this case, I'd look to take a partial probably near 1 standard deviation, or even smaller if we want, we could look for 2R just straight, right? No need to overcomplicate it. But definitely using those standard deviations for me are a big help. So take a small partial here, take a big portion of my position out here, and leave a runner for the opportunity to go here and perhaps even fully reverse. Because if you're wrong about the fact that this is simply a retracement higher, then it has an upside to go all the way up. So sometimes I do leave a runner. When my idea of a reversal, it just makes more sense. Like in this case, there's no SMT at that low. So my idea for if I was trying to frame a full reversal, it wouldn't be basically a good idea to do it here because I don't have additional confluence that this could be the point of reversal. So in this case, really fully targeting this level. And if you absolutely want to leave a runner, then just leave a runner in. You might be targeting this. You might even give your chance to the upside higher. But the truth is, I would be looking to partial anywhere near to R, and I have my projection level for my breaker block. And this would be my final objective, which is the first premium and efficiency of this latest expansion lower. So that would be a very simple trade for me here. Let me remove the text here because I don't like it overlapping and I want to make it smaller. And I did not remove the text. What? Okay. Okay, now it works. Okay, that was very weird. But as we see right here, very simple. And we can look at the result here. Let's actually go back and look. I didn't know if... Oh, that's actually a win. As you guys see, clearly very scary guy right here, okay? Very scary, went extremely close to your stop loss with SMT. So it's actually, I'm very confident once it goes all the way back down here when it forms SMT, because I'm like, okay, the reason why I'm in drawdown is because it had to form SMT. And then we went higher and we went pretty much straight to your take profit. And see, did we go right for that one? Oh, just a little under. So definitely look to break even early on a trade like this. And then we reach your objective. I think I'm going to try and do this more often. Do let me know, right? We're small crowd tonight, pretty much last minute change of the PA review. But let me know if you like this format of going back in replay mode, explaining why I'm entering here. And if that's actually beneficial for you guys, I'll try and do it a lot more often about explaining it while we see live bars. Yeah? Okay, well, I'll try and do that more often. For the people who are watching on YouTube, definitely let me know that in the comments. I really would appreciate your feedback on this. But after that, you've had a short opportunity if you were bearish. You've had a long opportunity if you were bullish. And even if you were fully bullish, right? And you didn't frame the power of 3 as I did today, which could happen. Well, truth is your full target would be all the way up here, but this would still be your partial. So you would have still have gotten partial and break even. This is why the rules are so important, because they allow for a mistake that pays you money. So even if you were wrong today, you could have made 3.21R, divide that by 2. Let's say this is a 50% partial, which is the minimum that are in the rules. I actually like to take profit more and my partial. But in this case, if you took out half, you're up 1.62 RR on the day. You're break even on this position and you got broken even, but you're closing the day up 1.62 R. If you're risking, let's just make it an easy number. If you're risking $1,000, you're up $1,620. That is a very good trading day, making $1,600 in a day, right? Can't complain there. But as I said, the true way you should have been looking at it, taking the logic I use in my understanding of the markets, is with the power of 3, this was only a retracement higher. And once that retracement objective is met, you can look for continuations lower. In this case, all I see very quickly here, and I'm going to go very quickly because it's a good loss. If you miss this move lower, and then you see this, you see, oh, retracement objective has been met. I can now continue lower. Now, of course, you don't have SMT specifically. Oh, well, did I speak too soon? Do we have SMT at this high? Taking out this level? No, we don't. Okay. We don't have SMT. Sorry. I went at it a little quickly. But no SMT being here, it's still an A setup. It doesn't need to be perfect. So you can look for this. And why am I putting a random short here? Because you have that breaker block that was formed right here. Overlapping PD array. That is your entry level as soon as we trade into it. 3 PD array stop loss rule gives you, oh, well, actually, inversion fair value gap right here would have given you an earlier entry. Let's use that. Oh, trying to move it aside. 3 PD array stop loss rule, you have that inversion fair value gap. This is not yet a fair value gap. And then you have order block, order block. Would have been a very quick stop. But to be honest, I'd have no issue with taking the trade any day of the week. This is a continuation entry, right? Where you have expanded, retraced, and you're trading that continuation. I don't think it's a bad trade at all. I just think it didn't work, which doesn't make it a bad trade. It just makes it suck, right? But definitely you've had a previous opportunity for sure. If you're continuously looking for shorts at this point, and as I said, for me, I don't look for trades past 11:30. Well, you could have still looked for an additional opportunity. Let's say I'm looking for something. Well, SMT formed here, which creates a breaker block on this last bearish candle of that range. So this range took out that level due to SMT. Breaker block formed right here. You could have looked to short there as well. Clearly, that is another stop loss. So if we just look at 3 PD array stop loss rule real quick, have that fair value gap, you have that inversion fair value gap right here, and that fair value gap above. So that would have been another stop loss. Truth is, when price is consolidating, you don't get nice opportunities. That's unfortunate, right? Price was high resistance here. I don't have a reason for you guys. Truth is, it just wasn't pretty. And then that last opportunity would have worked if it did give you an entry. Because I see this breaker block right here from this range, right? This high to this low. See, we took it out, formed a breaker block here. Do we have an inversion fair value gap to enter on? It does not seem like we do before 11:30, right? Before that line. And for me, I stopped trading at 11:30. That's a hard set rule there. So I don't see an entry before 11:30 from after we form that breaker block. So in this case, well, it would not, I say it would have worked, but it would have barely expanded lower and then stopped you out. So in this case, the morning opportunities were definitely very early right here. And then if you missed those moves, well, you would have been looking at 2 stops right here. So definitely not the best in the late AM session on this day. Definitely. If we look further, because after 11:30, you can always look for PM opportunities. And what do I always say about the PM opportunities? I look for 2 things. I'm either trading a lunch session raid, so a lunch raid, or I'll be trading the 2 p.m. power of 3, which means because at 2 p.m. there is EST and New York time pretty much, you have a 4-hour candle that opens and I can frame trades based on the power of 3 of that candle, which means I use the opening price in confluence with the AMD fractal, right? So accumulation, manipulation, distribution to look for trades. We haven't seen one of these setups in a while, actually. Well, maybe there was on a day that we didn't look at the PM session, but I noticed it today. I did not trade it. As I said, I was one and done today, but I do want to mention it and look at it. There are no lunch rate opportunities. As I said, you'd be looking for shorts here. So you're not going to trade a lunch rate long, or if you would have, you would have actually profited. So let's actually look if there's a setup. All right, let's actually look, because your lunch rate is here and it tells you that you're going to be looking for lunch high. As I said, every move higher for me on this specific day is only a retracement, framing from my daily candle development, right? So if I'm trading a bullish lunch trade, I'm going to frame this move as a retracement, and I'm not going to expect it to reach lunch high, because a retracement is not going to expand higher and go take out that liquidity. So in this case, if you are looking for longs right as soon as you can, here is the first bullish breaker that formed. Do we have SMT for additional confluence? It does not look like we do. I'm looking quickly. No, it does not look like we do. Still, as we said in the morning, we don't need SMT. It is just additional confluence. Formed a breaker block right here. You actually had a very quick entry at this level. Right here, we do have a volume imbalance. So once again, I include this in. And you have your 3PD array stop loss rule. You actually have only that fair value gap and order block right here, but this is the invalidation point of your breaker, right, of that range that we have right here, so you can't put it past this level. And if we look, you would have had, well, actually legit a perfect partial at 2, which doesn't seem to be reached right on this wick, but 2 standard deviations right here aligning beautifully with a level of liquidity. This is basically a perfect partial opportunity, right? This is what I look for in a partial specifically. So definitely would, it just jumps in my face, right? And then looking for a final objective, what do? Well, I'm going to refer to the latest 5-minute range. And if we look at this, we're going to refer to this full range, right? This is the latest expansion. This is just the final leg of that expansion lower. I did a call, I believe, when I talked a lot about focusing on the symmetry, and this is what I mean. This is the range I'm referring to in this case. And what is my first premium in efficiency? This fair value gap, important to include the volume imbalance, right? Which pretty much you don't have a choice, but it's just because this candle doesn't have a visible high, right? The high is the open of the candle. We didn't trade any higher, so you don't see a top wick. But very, very clear first premium in efficiency, and it's a textbook. That's what I meant by a continuation model, which we'll talk about in a second. But you would have had actually a very nice long that initially started as a lunch trade, but this should be your final objective, because you know that every move higher on this current day should be a retracement. And once again, what if you frame this as a full lunch trade and in your mind, we were going higher here? Okay, well, this is your final target, but this now becomes your partial. So once again, you are still making money. And in this case, you would have had a 1 point, I'm thinking 1.53, so 1.839, I guess. I'm probably far off there, okay? Quick math in my head doesn't go well when we're at that time of day. My brain is fried now, but hopefully I'm somewhere close to there. Still, partial, and then you would have won break even and looked to reach that final objective, and you would have gotten stopped out break even. But if you knew, well, I don't want to say if you knew what you were doing. If you followed the same logic I do specifically, in this case, we know that today, any move higher is a retracement and any move lower is an expansion. So I'm going to trade moves lower expecting full objective and trade moves higher expecting them to stop at my first premium in efficiency. And if in the 5 minute you did not spot this, then you would have went down to the 1 minute and seen that you actually have this order block, which overlaps with this fair value gap, because once again, you include the volume imbalance, which is almost exactly the same level. It's actually a tick lower, which means you would have hit it actually just before. So very beautiful. Once again, if you were looking to trade this as a full target, you were expecting upside, you would have missed this short opportunity that came right after. But if you did not, we're going to be talking about it here. Why do we have a short opportunity here? Well, very simple. You can also trade continuations based on the power of 3 at the 2 p.m. candle. At this point in time, my retracement objective has been met. So what can I now trade? Well, I can look for continuations lower. Now in this case, do we have SMT? I did not look. As I said, I wasn't on my chart at all during the PM session. I was one and done, but it's important to showcase these. We did have SMT previously, and we still have SMT here. So we do have SMT. Oh no, we don't have it anymore. So we had it here and it got invalidated at this high. So no SMT. Once again, only had SMT on our early setups today, it seems. But you have this range that if we look a little closely, we took out the high and then we took out the low right at this level, which means that as soon as this gets taken out, this now becomes a breaker block and I can look for an entry. I was actually looking at this just before because it's important to figure out what happened first. Because we have an inversion fair value gap right here that got inverted on the candle just before and traded back into on this candle. But then I need to know the order of things. Let's think about this for a second. If this candle opened and retraced into this inversion fair value gap before it formed the breaker block at this line right here, then I don't have an entry because the entry came before this was a breaker block. But if price went lower, formed the breaker block, and then retraced all the way into that gap, then that is an entry. When you're live in front of your charts, it's very easy to notice. I personally did not go live today. This afternoon, right? I wasn't looking at price. So I don't know what happened first. So in this case, all I need to do is go down the time frame and see what happened first. I can tell now by going down the time frames, if we look at the 248 candle, we formed the breaker first and then we retraced into that gap. So I know that the candle, looking at the candle live of the 248 1 minute candle, it first went lower to go form that breaker block and then it retraced into it. I did want to go the long way and explain this to you guys so you don't say, oh, it's on the same candle. Sure, but it happened after. That's the important part. And in this case, you would have had 1 PD array, 2 PD array, 3 PD arrays. So your stop loss would actually be extremely tight on this move, and you would have had a very nice move. Right? So definitely you have some relative equal lows here, which just look juicy for take profit if the RR is enough. So yes, right? If it's above 1.7, I'm looking to take a partial here. You have some relative equal lows. And why do I say they look so good? It's because I just do it all the time and it's in my head now. I see premium and discount, and I see these levels just being in a discount where if we are going to continue higher, we should reach this first. Now, of course, this is through experience. I just visualize premium and discount in my head all the time. But if you were to draw it, this would be, well, here, let's go to a 5-minute chart and think about the mechanical approach. This would be your partial. Well, actually, your partial would be the order block. So you would just go break even early on this trade and then look to partial at this liquidity. Once again, following the mechanical rules. And if this all sounds new to you, because I see some new names here and there, right? And on YouTube as well, go back to our past PA reviews. I think I talked about it in the last week, actually. So definitely something interesting on that end. And then, of course, look for price to go further, which is current low of day. And past current low of day, I'm never going to have some big objectives other than my higher time frame targets. Like, this is previous week's low. And since we just started the month, actually today, this is also previous month's low. So this would have been a very, very nice objective, but this is too far for me to consider that as a main objective. So for me, that would have been partial, take out the main part of my position here, and then look to hold a runner throughout the day. And clearly, very, very impressive results in this area, right? Reached all the way. So I just saw a very nice continuation opportunity in the PM session, so I wanted to talk about it. But honestly, I am very happy with my results from the morning. It's just being one and done. Could I have made more money trading today? Yes. If we look at all the possible setups, right, we had 2 wins in the morning, followed by 2 losses, right, which I now just deleted from this chart for thumbnail purposes, but we did review them. We did talk about them earlier in this call. So 2 wins, 2 losses. The first win covers more than the 2 losses. And then that second win puts you high up in profit. Then you have another win and another win. And once again, if we cover it, even if you were looking for absolute upside, right, that you were looking for a full reversal higher, it's still both of the times reached your partial objectives. Which means that if you were trading a rise model today, it was a good day. Right? This is why yesterday I said I love Monday's NFP. I love NFP week because it's where I perform the best. Not me personally, because I trade a mechanical, well, mechanical is a big word. I trade 100% rule-based model because there is some discretion in the rules, right? There is bias that is not established mechanically necessarily. But as I said, no matter your bias, as I said last week, right? Doesn't matter what your bias is. It only matters that you do have a bias. If you were bullish, you would have had 1 partial, then break even, 1 partial, then break even, as I just showcased. If you were bearish, you would have had 1 win followed by another win. Oh, wait, let's make this simpler. 1 win followed by 2 losses. Both losses were short, right? So 1 win followed by 2 losses. You'd be barely up money at this point, but you'd still be up money. Because, of course, this is our partial. This was our final objective as well. So you'd actually be up decently. And if you were looking to trade the PM session, you would have had another win. Oh, I like to run it through all of this. And see, it does lead to some longer PA reviews. We're here for 43 minutes. So first of all, thank you all for being here, for staying with me that long. But it was a very packed PA review. Definitely one to bookmark and keep close. I'm going to try and keep track of the PA reviews where we cover a lot of content, a lot of different rules and stuff, and try and create a folder to it. I don't know how I'm going to do that, definitely. Perhaps I'm going to pin them in the YouTube channel in Discord. Yeah, I'm going to do that. So starting now, I'll pin the important YouTube videos in the YouTube channel in Discord where you can get alerts for when I post. But do you guys have any questions after all of this, right? As I said, 44 minutes. So definitely going to call it a day here in a second. But if you guys have any questions, I am open to answering them. Nothing. We did go into a lot of detail, right? Very clear. Awesome, Alex. Awesome. All right. Well, on that note, once again, thank you all for being here in numbers. Always love it. Always appreciate it. All the rest of the PA reviews for the week will be at 8:30 p.m. Eastern time, so standard time for us. And good luck trading tomorrow. We'll see each other tomorrow night for another review. So good luck, have some fun, and have a great night, guys.